Ladies and gentlemen, welcome to the SoFi Weekly. Today, we have the great and powerful SoFi shareholder, Roy Crossroads. How you doing, Roy?
Doing good. Always good to diamond hand SoFi and never sell a single share.
Yes, me too. Me too. I love holding SoFi and no plans to sell until it's greatly overvalued or something changes.
That's right.
Anyway, Tevis is here. Tevis, how you doing?
I'm doing well, man. Great week.
Yeah?
Great week.
Yeah?
Yeah. Locked in some gains. It's been a good week.
Do you have any SoFi left?
Yeah, I think just a little bit. Yeah, I have. I mean, I don't know, man. People like, I remember calling Palantir a cult. We're a freaking cult, man. Man, I was like, I sold 10% of my position. They're like, traitor. I can't believe you're
Die.
I was like, you guys are insane. Delusional.
No, but do you think, based on the history that you've had with SoFi, I mean, you knew that we were going to close above 15. We did that. By the way, do you have any outstanding calls? Because in overnight trading, SoFi is up to 15.75. So I'm curious if maybe you have, $16 covered calls or what's going on?
No, I have a lot of long calls on SoFi. I do have $19 covered calls, which Roy knows about. I'm probably going to end up having to roll those. So you guys are welcome for 19. I do have my target of 20 by the end of the year. So I still think, here's the thing that I want people to understand. Nothing has changed about my thesis on SoFi. I'm still just as bullish as ever. Probably
2% less bullish.
No, not even 10% less bullish. I mean, Tanner, I know you don't mess around with leaps, but options are a very powerful thing, and they give me this magical right to buy the stock at a later date at whatever price I want. Mm-hmm. And like I said in my video today, if I wanted to, I could exercise all of those options that I have and literally double my position.
Is that Gary Gordon on the right?
I mean, depends which right.
Anyway, you're clearly not getting it, so let me just go ahead and get another opinion from someone else. Someone a little, with a little bit of expertise in diamond handing.
Okay.
Stephen Fiorillo, how you doing?
There he is.
Why did you invite Gary to the podcast?
Oh. Steve, I like your shirt.
I would have bought your shares.
I mean, go out on the open market, man.
No,
Buy them.
I mean, I would have bought them directly from you and held them for you and given them back to you when you wanted. Because I don't believe you really wanted to sell.
I didn't. I needed the money. And I needed the money
for a dividend portfolio you could have pulled from.
Oh, I totally sold that. Entire different, that money was tied up in other things.
Mm-hmm.
How much money did you use to buy out all the options? How much was it again? I know you told me one time, but I don't remember.
I'm not sharing that. Tanner, you don't share anything. When you start sharing your numbers and your portfolio, then we'll compare, okay?
So I do have a serious question, Tevis. I know we're pulling your leg, and maybe we'll talk about this in just a second. There are many reasons to sell, and if you need money for something, whether that's a purchase or something just doesn't happen right, it's not a bad thing to sell. It's not a bad thing to lock in profits. But Tevis, my understanding is you sold shares, not options. Is that correct?
Yes.
So why would you sell shares instead of options? Because options, at least in my mind, but I think there are some good reasons for it. I'm just kind of curious. But in my mind, usually if things are running hard, I will sell options. But if it's something I want long term, I don't sell any shares. But just kind of curious.
Yeah, I thought about selling the options, but my thought process was that because I have leaps, the options are going to appreciate more than the shares are, and so I'll capitalize more on the options when I convert them over into shares.
All right. Yeah, usually I prefer doing the opposite, just especially if something is run hot. That way, like you really capture a lot of your gains because the opposite is also true. Like if SoFi goes back to, let's say, 10 or 11 bucks a share, that goes down a lot more as far as a percent for your options versus shares. One reason that I do think is compelling is if you think that it's just fundamentally undervalued rather, and it's going to run hard in the short term. I think you're absolutely right, and I think that you're right. Like I think SoFi has a long way to run over the next year or two. Are most of your options for like 27 or 26 or?
Yeah, I have 26, 27, and I have Gen 25s, which like I could buy the $15 calls. I can buy those out in 30 trading days and literally have a bigger SoFi position than I, had before I sold anything.
Yeah. All right. Yeah, I was just kind of curious on the rationale because I was like, selling shares to me, like the one reason that I see that makes a lot of sense too. The other reason is if for some reason you own the shares and you have short-term capital gains tax if you sold those versus long-term.
Yeah, the shares that I sold are in my one of my tax haven accounts.
Yeah.
And in this particular account, you can like withdraw as much as you want. And then it just resets your quota of how much you can deposit starting in January the next year. And so this was like the perfect time for me to sell out because then I'll have that allowance for me to put back in the same amount in January. Like it resets the clock essentially. Whereas most of the options are in taxable accounts. I have some options in the tax-free accounts, but most of them are in taxable accounts anyway. So it worked out from that perspective as well.
People are actually being really nice to you in the comments. I'm not enjoying this.
I don't know why. Okay.
No, in all honesty, it was definitely a smart move. You're going to make a fortune on the deal that you're going through with. But
yeah, let me just talk about that for 2 seconds. So I don't really have to justify anything. I just want to add some color because I chose to post about selling and open myself up to criticism. I work in tech. A lot of our compensation is equity, and a lot of that equity appreciates because you have software valuations of smaller, fast-growing companies. Now, how that equity gets paid out is similar to like an options contract. So you essentially have the right to buy shares at a certain strike price. And for me, I essentially was grandfathered into a earlier rate before we got outside funding. When we did get outside funding, my options, like that strike price, it's up 5x already. And so essentially, I'm sitting on an option that's approaching an expiry date and I'm up 5x on my position. And if I don't convert into shares, then I lose that 5x. It expires worthless. And so it's just so stupid of me not to take that trade because it's an instant 5x that I've worked for the past 2 years at that company to accumulate. And so it's just an absolute no-brainer. And then when you raise another round, then it gets revalued by the market at whatever it's trading at. And since the company is growing, then the valuation is going to be even higher. So that could potentially be an 8x or a 10x of that money. And so, okay, can SoFi give me a 10x in the next 2 to 3 years? I don't think so, guys, because this is a private company that we're talking about, and it's going to move more aggressively than any public company out there. And so did I sell only SoFi? Absolutely not. I sold stuff across the board. I trimmed like a bunch of positions, and I needed to essentially accumulate a large sum of money in a very short period of time. And I didn't want to take out a loan from Steve because he'll come and break my knees if I don't pay. So This is how it ended up.
No, I think you know what, we bust your balls a lot, but it obviously was, you don't have to justify your purchase. The only thing that I would say is that will SoFi 10x over the next 2 to 3 years? I honestly think is just whether or not how much you sell. The more you sell, the higher chance it is that it will 10x. But that's up to you to decide. Whatever you write, man, we'll decide the price going forward.
As far as this community is concerned, we're square. All right. You guys wanted me to do you a solid and sell so that I could pump your bags. And I did that for you. Okay. I absolutely martyred a part of my position so that you can hit $20 and $30 and beyond. in addition to selling covered calls. So you guys are welcome. Instead of shitting on me in this chat, you guys should all be saying thank you.
Oh yeah.
Oh,
No,
we are
I-
eternally grateful. Just please do not write any cash secured puts. That would be a real disaster.
So yeah, if you could write some $27 calls,
It's not even
for
out yet.
January
I looked.
26, that would be great.
I don't think, doesn't it go up to like 25?
This is 27 on Robinhood at least. So yeah, as the stocks rise, you're new to options. As the stock rises in price, the market maker will put higher levels up there. Sometimes they get a little bit behind. I'm not sure, like on the process, if it's just not automated. If they have a guy named Bob that goes on vacation and then he gets back, and he's like, "Oh man, I'm behind on Palantir and SoFi. I need to put these up there." But yeah, no, 27s are available.
Steve, how you doing?
Wonderful.
Really glad you could enjoy us, bring the spirit to the, the SoFi weekly of hitting brand new 52-week highs. You sound excited to hold at 1560 right now.
I'm trying to match Tevis's energy of having paper hands.
This is the highest energy I've had in quite a few weeklies, man.
I don't think so.
No.
No, I think this has been good for Tevis. I think he's fighting back. He's had enough. I just don't know what this means for the stock. I mean, we've been on a good, consistent basis. I don't think you should change anything, Tevis. But
hey, man, this is gonna be I think I'm at a month now of running a wheel, and this has been my most profitable week of actually like gains from cash secured puts and covered calls. So you can talk all the shit you want, but let's compare at the end at Tanner, and then I think I'm gonna get you way more bullish on this wheeling thing.
I'm bullish, dude. I'm bullish.
Yeah.
Okay, so any news this week that we want to cover on SoFi? Nothing?
One that I saw posted out there as far as S&P 500 eligibility. They're not quite there yet as far as market cap. They need just slightly higher. That's one thing. There's a lot of tailwinds for SoFi over the next year and a half. I don't think that's one of them. S&P 500 inclusion usually for most stocks doesn't really boost the share price. And I know the exceptions always stick in people's mind. Certainly Tesla back in the day and Palantir fairly recently. SoFi, I do think, would get a bit of a boost when that happens. And I think it's a when rather than, if. But because it's a very retail held stock, just like Tesla, just like Palantir. But the reality is there are a ton of highly interesting companies that are already eligible or are just about to be that I think that are going to be joining the S&P 500 before SoFi. So maybe late 2026, 2027, is a possibility. Even if it is technically eligible, let's say in the next couple of weeks, I wouldn't expect like a December 1st or whatever. I know the first week that they'll announce the inclusions for the next quarter. SoFi will not be on there. Not at all. Robinhood might be, but not SoFi. Not yet. It's a little early. So, if you're an investor in SoFi and you're counting on that as a catalyst, just know that that's further out.
Yeah, I mean, it's definitely a possibility for 2025. I wouldn't rule it out. It just depends on how good of a quarter it is, but it definitely could be a possibility.
They need 4 quarters of holding that market cap, or is it only 30 days holding that market cap?
I think it's 30 days.
Right, so it's 4 quarters of GAAP profitability and just being above 18 billion market cap for 30 days, right?
Mm-hmm.
So if that's the case, and we can hold the $20 range for a month or two, then they can get in. I mean, it's not going to be immediately as soon as they're eligible. They're going to get in. It takes several quarters, but mid 2025 is a real possibility if we can hold those levels.
Yeah, I think the actual inclusion price is somewhere around 1630 or something like this. So it's the timer starts sooner than 20.
Well, it's 18 billion, and you ideally need a margin of safety to not,
Mhm.
fall under it. So 18 billion is like $18, right? 17.50, something like that.
Yeah, it's I think it's 1630 to be exact. Or at least it was whenever I tried calculating it through its outstanding shares.
Yeah, the other big piece of news, of course, was what Anthony Noto posted on November 21st. I've got it if you want to throw that up there. Nearly 3.4 million Americans rely on U.S. Direct Express, U.S. Treasury's largest prepaid debit card program, to access their federal benefits payments. Proud to share that Galileo FinTech is part of the team. The key word is part of the team. There's quite a few different providers there, selected by the Treasury's Bureau of the Fiscal Service for Direct Express. Is this a big deal for Galileo?
You asking me? I had it up. I saw Ricky post about this. I'm not sure. Not sure. 3.4 million users. Not the biggest deal we've ever seen. It's good, but I don't see why, because it's a government deal, that it's any different than, let's say, an existing fintech that we just wrote onto the platform, other than potential cross sell. I think there are some people that saw this online, saw a government deal, and then they are sort of looking at this like it's
Palantir.
Palantir. Yeah, exactly. But I don't think that that is what it is at all. I mean,
No.
we're not even making the large bulk of it. We're just being a single slice of an entire team of banking as a service clients in this deal.
I think it. Go ahead.
It's a good signal, though, that it sends that it's a stamp of validity that Galileo is a major player that's trusted by the largest of institutions out there, the U.S. government.
Yeah, no, that's as far as revenue, I don't know that it would be really that much for SoFi. Like, it doesn't hurt. They're not going to lose money from this, but yeah, I think it's the stamp of validity, just saying, Galileo has a credible product. Government selected them for this. That may help, future Galileo clients. Maybe some of those big banks, probably not, but we'll see. What do you think, Steve? Any thoughts on that announcement as far as U.S. Treasury using them, Galileo as a?
I think he's sleeping.
I think Steve just came on to give me shit for 2 seconds, and now he's on his phone the whole 59 minutes.
Well, I am multitasking at the moment, but I only care about the banking as a service. I don't care about the recent deal.
Why don't you, Steve? I thought the AWS of fintech was a big part for you.
It is, but I want a big financial institution.
The U.S. Department of Treasury not big enough for you?
I would rather get Citibank or Bank of America.
I think that's fair.
Because then you get a big name, you get others.
I agree.
No, I was buying alternative assets.
Pokemon cards.
Yeah, I was going to say, he has the most select words for being on eBay right now.
Yep.
And how much did you spend?
Don't worry about how much I spent.
Or are you currently in the bid? Is it coming down?
No, I'm not in any bids right now. We don't do that until tomorrow. It's probably Sunday morning. Start getting involved.
Got you.
I actually like running it up on people. It's fun.
I saw people, and this is really interesting to see. Like on a real note, I was seeing people on X asking like questions about SoFi and buying SoFi for the first time, and just being like, "Hey, notice this company called SoFi. Like, what is this all about?" Or, "Hey, completely," like, it was just popping up on my For You timeline. And I thought that was really, really cool, because at these prices, like, you're breaking 52-week highs every single week, and then you're getting price discovery, and it's just opening up to a whole new suite of investors that have never heard about this company that are just buying in for the first time at $15. And that's really cool to see just in real time, I think.
Yeah.
It's just like Palantir. Why is anybody buying at 60? Where were they at 20 and 25?
So did you guys, related to that, I think it's kind of where we're beginning to be at as far
Were
as.
you wearing a Robin Hood shirt?
Yes, of course.
The same
On
one I
the
was
SoFi
wearing.
Weekly. On the SoFi Weekly, nonetheless.
Yes.
What are you doing?
The quality has dropped since you left, Steve.
The quality of the shirt's great. The quality of the company is great. You own Robinhood, sir. I thank you very much, and you're welcome.
I'm not wearing a Robinhood shirt on SoFi Weekly, though.
I don't have a SoFi shirt. They won't send me one. That's fine. Whatever.
Steve, you own Robinhood?
I'll wear Palantir.
Roy was kind enough to buy it for me.
So, related to the SoFi thing, like I've seen that too, and I kind of love it, but I also hate it because I mean that's typical retail. Like that, not our audience here, not people that have held SoFi for a while, but it's just chasing those things that are running. So like right now, Solana, ADA, XRP, those sort of things are running. So people are like,
oh man. Hold on, sir. Don't talk about chasing the XRP. My cost base is 21 cents. Don't talk about chasing.
But I'm not saying you. I'm saying there's people that never considered XRP, when it was like, 30 cents? And now they're chasing it and they like, oh, wow, there's this awesome token and it's going to be amazing. And maybe it will, maybe it won't. Same thing is happening with SoFi. And I had an encounter. Did you guys see my post on Palantir with this, with the retail? So on Thursday, Houston is not very cold. And I have a Palantir jacket and I've worn it, just like to try to on and enjoy it. But like
I saw that, the drive-thru.
There's never been an actual reason to put it on. So I put it on. I was driving to work. It was one of those days that I was going in a little bit later. So I was getting in right around lunchtime. And I'm like, you know what? McDonald's is right here. Grab some chicken nuggets. And so I go ahead and pull in at the drive-thru. Literally, so I have on my left arm, the Palantir name right there. And I think the logo, maybe the logo is right here. The drive-thru guy, they have the first window. They're like, hey, do you want a receipt? I'm like, no, I'm good. He hands me a receipt anyway. I'm like, okay, whatever. And he's like, that's a great company. I'm like, excuse me? And he's like, yeah, that Palantir, right? I'm like, oh, okay, yeah. And, we had a little conversation. And so he's like, that's an amazing company. And I was like, yeah, it's one of the best. I love this company. And he said, okay, well, they make clothing, right? They design clothing? Like, no, it's an AI company. It's a really good one. He's like, oh, okay. I just see that the stock's always going up. So I figured it's a good company. It's like,
He found Palantir through their merch store.
I don't know. Eliano, I guess, is like bringing that company. So that's why it's going up, is those margins on the clothing and stuff. But no, it's just I'm seeing more of that from just not just related to SoFi. Some was related to SoFi, and a few people are like, oh man, you told me to buy SoFi and I didn't, or I did. Like I've seen with Palantir, starting to see that with crypto and the stock market at large as well. That doesn't mean that the bull market is over. It doesn't mean that Palantir is top necessarily. It doesn't mean that SoFi doesn't have more to go. But there is a certain point in a bull market, and it's usually not early, when just Main Street retail it just opens up their eyes and like, wow, this amazing bull market rally is here. And maybe some people here are tuning in for the first time. That's fine. I encourage you, if you're invested, learn what you're invested in and why. Check out market cap. If you're not familiar with market cap, there's a lot of videos out there too for first-time investors. And just be careful. Things that are running usually are running for a reason, but not always. And sometimes things have run far too much. I don't think SoFi is there yet. But I think we'll see a lot more of that over this next year.
Can we talk about not just when people are getting in, but when to get out? So Tevis decided he's going to fully sell out of his SoFi position in the 15s. When do you guys want to start exiting SoFi?
Well, I have options. So that gives me, like, my shares I don't plan to exit at all. Maybe someday distantly in the future. If I need money at some point, that's always valid. Like, we may realistically, I'm being a little quieter just so my wife doesn't hear, get another Tesla this next year. So I may take some gains from some of my companies, all of them probably across the board, like Tevis did. But the other factor too is with options, I have a naturally timed exit. And so with options, I have certain strikes and certain places where I would actually begin selling. I've not sold any of those because I had some 25s left anyway that I ended up selling. Right now, just selling covered calls cautiously because we're in price discovery mode. And no, I really think that this company base level, just based on the lending platform and a little bit of tech growth, with financial services doing what they're doing in the middle of this bull market, with the catalysts that I see as far as fintech moving from a bear market for the most part to a bull market, especially with the SEC chairman being gone, I think $25 is pretty reasonable for this next year as a base level. So once we get a little bit closer to that, I may end up taking some money before I hit that baseline target. But at that point, I'll have certain levels where I'll start taking profits on those options. A lot of my options, like Tevis, I have some for 2026. I have a lot for 2027, just because I figure if Noto and company are getting these PSUs, then at certain levels, I might as well benefit from that too. But no plans to sell. I'd actually not sold any SoFi at all, other than 2025 leaps that were expiring anyway, this whole run up. And that's not characteristic for me. Usually I do.
Stephen, when would you look to trim SoFi or potentially exit your position? What do you look for?
When I don't believe the investment case is there anymore, I have no interest in selling this.
Now, do you think that it could potentially be overvalued?
Of course, anything can.
And would you sell at that point?
Probably not.
What?
It depends. It depends. Look, if they keep firing on all cylinders the way they are, I have no reason to sell.
Now, to the group, what do you guys think is fair value for SoFi?
Right now, I think 14 to 18 is my fair value range. I'd have to go back and look at that again, but it's right around there. Just because something goes above the fair value range doesn't mean I'm immediately a seller. In a bull market, I think stocks can defy gravity for a while. They do trade on fundamentals, also on narratives as well. And so that base level target of 25 at the end of next year, I think is, it would be, I would say there's a very good chance that they exceed that, especially with short interest and everything. For me, like ridiculous. So overvalued. Well, not overvalued. I prefer the word expensive. Expensive, at $20-$25, I wouldn't be buying. I've already have a nice size SoFi position. But when it becomes obscenely overvalued, let's say SoFi hits $40 this next year. I don't think that it will. It can, though. We're in a bull market. I mean, we see some crazy valuations on a number of names. If it does, I will still have some SoFi. I don't think I would have sold any of my shares. That's the nice thing about shares. But yeah, a lot of my options would be gone at that point. And I might buy a yacht at that point. Just kidding. But
yeah, I didn't ask Tevis about when he's going to sell because that was today.
$15.63, baby. So that's pretty much when.
Now, to be honest, though, Tevis, to answer that question, if you did not have options, now I don't mean the options that you have, but I mean the, your Series A deal that you're going through. So, if that wasn't a case, when would you actually look to trim SoFi just based on securing gains?
I mean, I think if something fundamentally changes with the company, and if we see a report where, okay, either the company is not doing as well, or somebody key on the management team changes or leaves, or the prospects are not as good from a macro perspective, when the story changes, then I think, okay, it's time to leave. But again, that could be quite a while. I do want to keep a core SoFi position over the long term, and then the rest becomes a matter of, opportunity cost, if you want to use that term, or liquidity to use somewhere else, which is, I mean, if a company is still executing, you want to be in that company for a long time, but there's also companies that are executing at a higher level, right? Which is not, I'm not saying that's the case with SoFi today. I'm saying that over the next several years, if SoFi grows at 20% or 15% and their growth rate starts to fall, then I'm going to look at other companies where I think that there's a higher level of opportunity there.
Yeah. No, I today, in response to your selling video, I talked about the PEG ratio for SoFi. And if you take Wall Street's analysts, Wall Street analysts for SoFi, their predictions on a consensus basis, they're sitting at a rate around a 1.3x PEG, or slightly overvalued. If you take uh, management's expectations of, potentially the midpoint of 55 to 80 or even 80 cents, and then a 25% compounded annual growth rate for the next, 2 years or so, which is what management said that would happen on EPS, you're looking at somewhere in a PEG ratio between 0.8 and 0.9. So still undervalued. So I actually think what Roy said, if you were to park yourself somewhere between Wall Street and management, which could very well come above what management said, you're looking at $14 to $18 probably being a fair assessment of what fair value is right now. So, I think that's a good way of looking at it. And then you also have to think, okay, well, if it does get past 18, what would you rather buy right now? Are you looking to secure those gains so then you can hold cash? And is cash going to outperform SoFi over the next 12 months or something? Like what are you doing with that money at that point? Assuming that, time horizon is infinite. So I don't know. It's weird. I think even if SoFi were to continue to run, I'm not doing anything because I don't know what else I would do with the investment. And I still believe that this company is going to compound at essentially a 30% rate for the foreseeable future. And just like the loan platform business, we don't know what's to come we don't know. Like it's hard to price in the loan platform business whenever we had no idea that was even coming in the first place.
Yeah, if I didn't have a absolutely massive position in SoFi, it's a clear number 2 now because of the run. Before the run, it was right around number 2 with a couple other names. I think Tesla is actually number 2 for a little while, maybe PayPal. But right now, it's especially because I have so many options. It's run hard, and I'm at no hurry of taking any gains anytime soon. If SoFi was my number 4 or 5 position and I had a 5% allocation, I would be very comfortable buying it at this. I'd hope that it'd retrace a little bit. But where they're going over the next year or two, we have a pretty good idea of that just because of management giving us those 2026 expectations. It's not obscenely overpriced at all here. I had somebody mention that as oh, it's run too far, too fast. It's no, it's the thing is when a stock has been undervalued, just grossly undervalued. And I know bears will be no, it should be $3 or $4, but give me a break. It's $7, $6. A company that it's growing rapidly, that the thesis was delayed a bit because of rate cuts and because of their deliberate approach to the lending platform. Mostly, there's a few things that were imperfect as well. It can run up really, really fast. As soon as the market kind of opens up their eyes and they're oh, wow, this actually is an incredible opportunity, buys it up like crazy. A lot of institutions came in as well. I think where we're sitting is not a bad range. It's fair value. I don't think we're undervalued. I don't think we're overvalued. If I know SoFi, and I think some people are probably maybe first-time SoFi owners in the chat, it's not a bad price if you're planning to hold it long-term. If you don't need the money anytime soon, it could certainly come back down. We could have a pullback before the end of the year. Wouldn't be shocked, but man, there's a lot going for the company right now over this next year. So, barring it becoming ridiculously overvalued, I have no need for taking some gains yet. Next year, yes.
How about this? It's not even at its all-time highs. It's slightly above where Noto purchased shares 2 years ago. I mean, he was purchasing shares when it was at 14.20 and purchased shares the whole way down. So we're not even near Palantir overvaluation yet.
And I don't think that it will be, but it doesn't have to be. SoFi is its own thing. If the bull market continues, I don't know that we'll have the everything up rally like we had in 2020 and 2021. where junk is even coming up. Like we'll have some of those, just little bits of time, but in that kind of environment, like SoFi can do anything fundamentally. Like even without that, like from 15 to 25, with what I think that they will do on their lending side, even if the tech platform is just kind of okay, they're in a good spot. Like, and I love it, when it's like there's really high upside with what the market's doing, but even fundamentally, it's like it's not bad right here.
Yeah, I just think the velocity of the move upwards psyched a lot of people out, because if this was a company where, okay, SoFi has done a 2x in the last, 2 months. If SoFi had gradually increased 10%, a month, or 8% a month for the last 12 months of the year, and it still started at 7 and it still ended up, at 16 roughly, people would not like say it's overvalued. It's just been gradually increasing relative to how their underlying business has been moving. But because it stayed flat for 11 months, and then on the 12th month it just like doubled, people are saying, wow, this is overvalued, because they have this recency bias. I just think that relative to some other names, like, okay, well, SoFi's done a 2x in the last 2 months. Freaking Rocket Lab has done a 4x in the same amount of time. And so it's just, I think it's a feature of this market and money from the sidelines coming in and trying to find a home that will yield it some return. And that's not just SoFi, that's so many other names. And SoFi, I think, is finally, after so long of sitting on the sidelines, it's finally starting to participate in the rally that many other names have been participating in for the entirety of 2024.
Yeah, I don't think because of the amount that we've ran up, that's a reason for the overvaluation. I think it's just catching a lot of people off guard, that the speed in which it got corrected is a sign that it's going to go back down to 7 or something along these lines. There was a real belief for a little bit there that SoFi should be valued as a bank, if not worse than a bank. And I'm very happy that that's no longer the case.
Yeah, I honestly thought, and I mentioned it on here 3 months ago, that if price action continued where it was at, SoFi could be a victim of tax loss harvesting in an environment where a lot of people have gains to offset and not too many that have lagged. We could see an even larger down spike. I mean, that's not happening now. There's no losses to harvest unless somebody has a really weird portfolio and diamond-handed SoFi didn't average down at like 16 or something. Names like Enphase, I think there's a real danger there, but it shocked me. I'm one of those that is shocked because I was like, we might finish the year maybe a double digits. I mean, I had a post like 5 weeks ago, I think, that I had a lot of successes, a lot of things I predicted right this market, and my biggest miss was SoFi going to 20. Now it's like, my biggest mistake might be that mistaken post right there. Like, let me ask you guys this. What do you think? What would you say the chances are of SoFi running to $20 by the end of the year?
I'll let Tevis take that first.
My gut says 70%.
70%. Wow.
Yeah.
How about this? Short interest is still 15%.
Well, that too. Well, we'll see what it is, what it ends up being, because it's fallen from 18 to 15 and the numbers are still 2 weeks delayed. But I think, Roy, it's going to get carried a lot by the macro euphoria leading up to inauguration. Like, I think that more and more money is going to plow into the market. I mean, we saw it all of this week, right? We've seen with HIMS, with Tesla, with pretty much everything that is on my watch list is getting a premium. And I think that if you just look at the technical chart for SoFi, I think 20 is a real possibility. I don't know that we break and hold 20, but we'll reach that level, maybe get rejected because it's a huge psychological level, and the year in like 18 or something. But, I do think we make a solid try for it.
So I don't think that it'll be above 20 end of year, but I do think it'll be very close, somewhere around 18. I do think that we'll be above 20 after Q4 earnings has been released. So January 29th or whatever. But Steve,
Yeah.
I'd love to know your answer to that question. And then also, actually answer that. And then I have a very quick follow-up question for you. But where do you what's the chance that SoFi is above 20 end of year?
You still got a month, 5 weeks left. I mean, I don't think that you're going to get a tax loss harvesting season this season. I think that a lot of people are looking at the Trump administration, corporate taxes potentially going to 15%, potential new tax cuts, and you could see capital gains cut in the next policy change. So I don't think you're going to see a lot of people taking profits and trying to offset them this year. I don't think you're going to get a tax loss harvesting season. And I think this really could hit 20. I mean, don't fight momentum. I mean, everybody gets that wrong, even me, but you don't fight momentum. And this has got a lot of momentum right now. And with a big short position, still in the double digits, no matter where it is, you still got people that are going to get stopped out. So I don't know. It could easily go over 20.
So,
Also,
Steve?
by the way, Tanner, I was running a poll on my chat, SoFi 20 by end of year. About 117 people have voted, and it's like a 70-30 split of people who think it's going to be 20 by the end of the year versus 30. Now, echo chamber, sure, but just to get another data point.
if you would have put 30 by end of year, it would have been 70-30. You know,
I think 25%. Yeah, I don't think it's as high as you guys do. I think we will get a Santa Claus rally, but I mean we're rallying right now, and the market probably needs a cool down at some point. I don't know that we're going to get a pullback this year or not, but I mean the RSI is really high on both the market and also on SoFi. It wouldn't shock me that we just get a little bit of bad news and people are like, hey, let me capture some profits.
Don't forget.
But like you, Tanner, I think that we're going to be very close. Wouldn't shock me if we're at 18 or even 19 by the end of the year. So, and with short interest, like who knows, we could get a squeeze going on. That's not why I'm invested. It's not what I'm looking for out of SoFi, but it can happen.
Don't forget, a lot of people started positions between 12 and 18, and they dollar cost average down. A lot of people that have cost bases in the single digits have some buys that were in the teens. Who's really selling here? That's the thing. I think that there's way more buyers than sellers here.
who's
And
selling here?
yeah, who's selling here?
I think we know, don't we?
Keeps going up.
Tevis is selling here. Steve, we had talked recently about why you're very bullish on the market, and it actually just had to do with.
Wait, hold on. Just before that, guys? I'm tired of this selling bullshit. All right, because
I'm
think
trying to
that
defend yourself. We're moving on.
No. As a percentage,
Oh, he's muted. That's so crazy.
I swear to God, as a percentage of your portfolios, I think I still hold the largest concentration of SoFi, because my portfolio is like
Concentration or amount?
Concentration, Steve. I'm not like a multimillionaire like you. All right?
I'm just asking.
Take it easy, okay? I
I'm
don't have
just
2
asking.
properties in New York. All right.
I'm just asking.
Honestly, Steve, I don't think all 3 of our portfolios up against Tevis's
all right. So
would even be able to.
I think Tanner's holding the most SoFi, actually.
Yeah. Well, I think Tanner holds the least SoFi out of all of us.
He runs a show called FinTech Weekly. I think he holds the most.
Bro, he holds 100 stocks. All right. So like you can't have a larger position in SoFi. So here's the game. All right. I want you to look at your portfolios and you tell me what percentage of that portfolio is SoFi. I'll go first. 35%. Go ahead.
I have too many accounts I'd have to look at. It's definitely under 10%.
Okay. Tanner?
Under 10.
Okay. Roy?
It's getting close to 20%.
Go fuck yourself, all of you. Thanks.
All right. And this is why, because Tevis has such a large position and makes up for such a big
You
portfolio.
should stop drinking that Celsius, man.
I'm just saying, man.
You should stop drinking that Celsius.
That whenever he makes moves, it has real impacts on the stock.
He moves the market.
Have you guys ever read the reports? He has to report his name. He's in one of the largest shareholders of the company. It might be 35% of his portfolio, but it's what's the percentage of the float that you own, Tevis? It's
More
in
than
single
you.
digits, right?
More than you.
I don't think I'd take that bet.
I would take that bet. I don't know about total portfolio value, but total SoFi shares, I would take that bet, dude.
Steve,
Tanner.
let's talk about your ideas of the macro right now. So you said you were very bullish right now, and it actually had to do with some tax implications.
It did.
Do you want to tell everyone about what you were telling me the other day? I thought that this was a great take.
Yeah, sure. So I don't think people are selling, as I alluded to, this holiday season because there is a halfway decent chance a capital gains tax is going to get lowered, regardless of what it gets lowered by. I mean, Trump's already come out and said zero tax on tips, zero tax on crypto. You got to think he's thinking about some type of reduction in capital gains tax. So if you know that the previous tax policy is expiring in 2025 and they got to vote on a new policy, and the Republicans have all three legislative branches, he's probably going to be able to get through most of what he wants to do. So why would you sell now to pay 20% when the macroeconomic setup is very strong for 2025 with the Fed rate cutting 75 bips off the Fed funds rate? You have oil around 70. You have GDP growth for the past 10 consecutive quarters. You're most likely going to have a stronger business environment. Why are you guys laughing so much?
Because Tevis is being called Jason Bourne in the chat because he owns 35% Tesla. This is SoFi.
Okay. Anyway, you probably have a very good business setup in 2025 because it's a good setup for business expansion. You have more CapEx that's going to be spent from the Mag 7. They've already said that on the conference calls. Amazon spent $69 billion in the trailing 12 on CapEx. Alphabet and Microsoft have both spent between 40 to 50 billion in CapEx over the trailing 12. The amount of money that's going to flow through the system is going to be tremendous. And it could be more because businesses are going to be more inclined to lend. So if the market is going to rally, I just don't think people are going to sell now because what are you going to, use round numbers. For every 100 grand profit you have in a company, why are you going to pay 20% long-term capital gain tax on that and then reinvest 80 if the market's going to keep going up potentially, and you may end up paying 10% on capital gains? We know the one thing we know, capital gains tax is most likely not going up from here. Mm-hmm. If anything, if there's going to be new policy, odds are it's probably going to go down. So I just don't think people are going to be selling as much as what people think this holiday season.
So when does this end in the new year, or does this continue? How far into 2025?
Unless there's a black swan event, such as a recession or geopolitical conflict with a war break, like a big war breaking out, I think the S&P is 6,700 to 7,200 by the end of next year. And I know I'm giving a wide range, for a reason, because there's a lot of things that could happen. And I think we're going to have another really good year next year. I don't see anything on the horizon that's really scary outside of black swan events, because with oil hovering around 70 and you have a president who wants oil prices down and is going to deregulate, and Saudi Arabia has already said they're going to bring 1 million barrels back on the market in December. The rest of OPEC Plus is probably going to increase and ramp up production. You may see oil at 60, 65. Input costs come down. That improves margins. Interest rate comes down. that improves margins because any rate that's a floating rate, pay less interest on. You can refinance higher rate debt. It's just the business setup is very good for next year. So I think that it's going to create a really good environment for the market.
The two things that, beyond Black Swan that I think could be a drag, and I think it'll be a good year, but I don't think it's going to be quite as good as you expect. Government cuts, which I think it needs to be done, has to be done, but it will be a little bit of a drag on our economy short term. If Doge actually does even just a small part of what they're planning to do, and I'm not talking about the meme coin, there will be a bit of a drag. And then the other factor is tariffs. The question is, how much of that tariff talk is just a negotiating tool? How much is reality? What are the details? We don't really know yet. But those are two potential drags. Now, a lot of, I can't remember the investor, was it Peter Lynch that said if you spend, 15 minutes on macroeconomics, you've wasted 10 minutes of your time. So, just take it with a grain of salt. I think it's going to be a very good year. Those are like the two concerns on my mind.
Tanner, go to macro trends and just bring up the S&P chart, unless you want me to do it.
I can do it.
All right. Just go to market indices and bring up the bar graph for the S&P on an annual basis.
Going out how far?
No.
Okay, this is why I'll do it. And because he just definitely clicked exit studio. But we're here. If I'm using ad blockers, well, I don't want to stop.
I'll do it. Leaves.
Here. Okay. Way to go, Steve. Welcome back.
Yeah,
You did it, buddy.
Yeah.
Not that one. Well, I'm bringing it up.
This dude is in his 30s, and I swear, around technology, he acts like he's in his 70s.
Dude, I went to make the screen bigger and I hit X instead of the thing. Sorry.
You would get a pass if that was the first time that's happened.
No, it's not the first time. Just give me 1 sec. Hold on.
You don't want this, Steve? This is
that's
the
not
macro
the right
trends of the
chart.
S&P 500. This is not what you wanted?
But I did not say a freaking line graph. Hold on. I'm going to present.
Thank you, Brian. Appreciate that.
All right. So the last time that we had 3 consecutive years in a downturn was the dot-com bubble. We haven't had 2 consecutive down years since then. And since that, the last time we had 2 consecutive down years was 73, 74. I mean, the likelihood that we have a down year or a bad year next year just isn't necessarily in the cards. If AI really is in its infancy, the way it looks, you could see several consecutive really good years, even just like you had before the pandemic. I mean, it's just, I don't know. When I look at this and I look at the way the business environment's setting up, I don't think that it's going to be a bad year next year. I mean, this is roughly 70% of the time you're green.
This is, to me, what's coming up this year is 1924. 1924, the federal government was incredibly bloated. Part of that was World War One. Of course, the Warren G. Harding ended up dying, and Calvin Coolidge became the president and ended up instituting tariffs, ended up cutting the federal government quite a bit. A lot of people, and there was actually even recession talk right there on the horizon. And at the same time, you had a thrust of mechanization and industrialization in the United States economy. And so that kicked off, it was really the first year of many, many good years up until 1929. That was the roaring 20s, of course, also known as Coolidge prosperity. And so there's a very good chance, not everything is perfect. There are geopolitical tensions, just like in 1924 as well. But bull markets climb the wall of worry. And I mean, AI is very, very real. Companies that are well run are implementing it across the board and seeing quite a bit of return and savings. There are things to certainly figure out. but it's the beginning of the story. It is our 1924 moment, I think, not the end of the story in 1928, right before 1929 crash. Even valuation on a lot of names, like some names, yes, Palantir, really, really high evaluation. I think over the next 5 years, we're going to see a lot of those crazy high valuations catch up just because of what that is able to do for the entire economy. And the nice thing is, this won't be quite like the everything up rally just because there's liquidity in 1921 and 2021, but there are some real driving forces in our economy right now, and it's a great time to be invested.
Yeah, and don't forget, the bigger companies are just going to get bigger.
In freaking 2009, 2010, there was an article talking about how the next recession was coming. In 2011, there was one. 2012, 13, 14, 15, 16, 17, 18, you'll find articles talking about how the next recession should be right now.
It should not be right now.
Request, can you guys do an episode on SoFi option strategy? Yeah, I'm sure we can even cover that now or potentially.
Tanner, hold on.
Thank you, by the way, for the donation. That's absolutely appreciated.
The reason why a recession shouldn't happen right now is because the number one indicator of a recession is unemployment going up by a percentage point or more. Because every time you've had a recession since the 50s, even longer.
I should restate. I said
unemployment
recession
has gone up drastically through a recession. We're nowhere near that right now.
Sorry, I misspoke. Whenever I said recession, I didn't mean economic recession. I meant more of a bear market or a correction in the market rather than.
Yeah, but I mean, a correction and a bear market are two different things. A correction could be 5-10%. We should have a correction at some point. I just don't think that a correction is going to be long-lived. I think it's going to be bought up because you have 6.5 trillion sitting in money market accounts, and that doesn't even include CDs and T-bills.
I don't think that most of that money is going to pour into the market, but there are a lot of people that are, have some money, especially at the end of the year, that are looking to put some money in different places.
Remember, Roy, a lot of those people, and I agree, aren't risk takers. They're not looking for capital appreciation. But that T-bill and chill crowd has gotten killed.
Yeah.
They've gotten absolutely killed. Whether you want to say you could have just put it in an index fund, whether you want to say you could have put it in a ETF like JEPI or JEPQ, they've gotten killed because they weren't generating 5.5% the whole time. If you had bought a 1-year bond or a 1-year CD with 10 grand, you would have generated 5% in the last year. But in the previous years, you would have done 3 and 4.5% when you look at the timeline. So that crowd is eventually, these rates are not going to look lucrative. When you look at the St. Louis Fed chart for inflows to money market accounts, it really didn't start popping off until 3.5%. And now with the Fed coming down next year, they're projected to end the year at 3.5%, 2026, 3%. So at some point, people are going to look for other ways to generate income rather than risk-free assets. You'll probably see pipelines. You'll probably see REITs get a bid on it. Boring companies. I'm not saying big tech, but I think boring companies like Enbridge, Philip Morris, AT&T, Verizon, money will move into there, and you'll see a broad market rally most likely because they're going to try to recreate the income they've been generating from risk-free assets.
Yeah, at some point as rates are continue to get cut, and it may be towards the end of next year, maybe at this time next year, that the stock market will become TINA again. There is no alternative, and right now there is an alternative.
There is no alternative right now. I mean, cool. You got 5% in T-bills. That's a cool story. I mean, what's the S&P up this year? 21%.
Yeah, I had a back at the university I was working at. I was training the guy. And he was in the stock market in 2020, 2021, 2022. Didn't capture many gains, ended up selling and then bought T-bills basically at the exact moment the broad market rally began in late 2022. And I was like, man.
S&P 500 year to date is up 26%. Trailing 12 months, 32.6%.
Yeah, so you could have been hanging out in T-bills for 3 years and you still got crushed.
Mm-hmm.
I mean, it's just, I don't know, unless you have enough money where you're living off of it and you surely don't care. Anybody who is in T-bills and didn't just put it in an index fund, it's been the wrong move. And that's the thing. Nobody can time markets. I can't time markets, and I read at least 2 hours a day worth of stuff about the markets. I can't time them. I've never met anybody that can time the markets. I know people that can trade well. I know people that do well in the market. Nobody that I know can time the market. And it's timing the market, not time. It's not timing the market. It's timing in the market.
Steve reading for 2 hours, by the way. He's got that Kim Peek disease, so he can read the left page with one eye and the right page with another eye. And so the amount of content that he gets through is not the average 2 hours worth of research.
That would be awesome if I could do that.
You should look up Kim Peek. He was the guy that they based, or what they assumed was based off of Rain Man, the movie.
No, just you need to have something read to you at 1.5 to 1.75x is what you need to do.
Can I ask let me ask a SoFi related question, you guys, and this is one like I'm throwing out because I don't know the answer.
Okay, but we got to get through that option strategy as well. I want to do that for him.
Well, real quick. So
do a full episode on that.
Related to the tech platform and the pipeline, there's just the talk of like hopefully like Citibank or some other major players there that are trying to figure out the timing of that and also how to fund that. Do you think that the funding piece is answered, with corporate cuts? Because all of a sudden the corporate tax rate is much lower. Do you think that leads to pipeline deals?
Yes, but nothing that you're going to see in the immediate short term, because it's just going to remove an extra hurdle of objection handling that they would have against SoFi as a vendor. But the pipelines are still going to go through that POC and still take their sweet ass time to get through into final approval stages. So if I have budget that's renewing in January to spend on a vendor, for example, then it's not a deal breaker January 1st when SoFi's sales team or Galileo sales team gets in touch with me. I'm going to entertain that conversation, but that deal won't close for another, 12 months, 18 months, whatever. And so, yes, but not as bullish as you would think because it's not an immediate turnaround.
To be honest, I didn't hear quite the question. I think what you said is with new regulation, do Galileo deals come quicker? Is that what you said?
With corporate tax rates being lowered, all of a sudden corporations have more money because they have to pay out less in taxes. One of the considerations, I don't remember the exact quote, but Noto mentioned that these legacy banks are trying to figure out the timing, the implementation strategy, and how to fund, of course, these pipeline deals. And so I'm thinking that the corporate tax rate reduction answers that last piece. So I'm kind of curious if that leads.
Roy, don't forget, the loans that SoFi is holding appreciate in value as rates go down. Don't forget about that.
So one quick thing. To the person that's donating, thank you so much. What I think we're going to do is do a full episode on that. I don't know if you guys want to, how do we want to do that? I don't want to wait till next week to do that. We should do that this weekend or something.
Yeah, I got time this weekend. I can give a quick, we'll figure that out off the clock here, so to speak. But I'll give you the 1 minute version. Option strategy is A, figure out where Tevis put his strikes and make sure you're higher. 2, we are in price discovery mode right now. Price discovery mode means unless you're okay with them being called away, be very cautious with selling covered calls. I personally prefer weeklies, sometimes just selling out on the monthlies as well. But only, if I'm okay with them being either rolling or being exercised. But I'm a little bit serious on both of those strategies, but especially price discovery mode, especially with the short interest, anything can happen. And so don't sell a covered call that you're not at least okay with exiting in this type of environment. Because we just talked about the possibility of SoFi being above $20 at the end of the year. I'm in the minority. Most of these guys think it's probably more likely than not going to happen, and that can happen in a hurry. So be careful. TA guys are your friend, by the way, in this kind of environment. Whether you believe in TA or not, enough people do believe in TA that at some points it becomes a self-fulfilling prophecy. So see what some of those guys are saying as far as what they expect the next stock price action will be. I'm not a TA guy, so.
Yeah, I think that we should have more TA guys on here because although we are not, obviously it still is a good percentage of the market. So to get a feel for how, seasoned vets in that area feel about SoFi would be good to have, Jesse Dow on or Income Sharks or one of these guys on from time to time. That would be amazing. Okay, what's going on here? Willy Wonka gifting 10 memberships. Thank you, Willy Wonka. Appreciate it. Thank you so much. All the people that just got memberships, by the way, make sure you're on the Discord. You're going to have access to a different area of the Discord and join in a different discussion. But yeah, so let's find a time to do that option strategy because obviously I can learn a lot from you guys here. That'd be a lot of fun. In terms of the actual question that you said, though, Roy, with the Galileo deal, what I would say is that before they were getting these deals done in 6 months' time. And everyone forgets about that and talks about how it's a 24-month process because those deals got pushed out further and further and further and further. I think that with a lot more clarity here, better taxation for these corporations, better ways to budget, understanding that rates are coming down. I think that a lot of deals can close much faster than people give it credit for. I'm very interested to see what SoFi is guiding for in 2025 because I think they could surprise a lot of people with how much growth can happen on Galileo. And I think people forget that. They need to go back and look how fast Galileo scaled from whenever they bought it with less than 30 million members up to 120 million members. It happened extremely quickly.
Yeah.
And that was just Galileo, no Technisys, no bank, no issuing cards, no securing deposits. Yeah.
Thank you. Yeah, that's helpful.
Anything else, guys?
It's a fun time to be in SoFi. I know, a lot of people out there like opportunity cost and you never know. It's always hindsight. Fundamentally, this company has been phenomenal. You would not know it by the stock price. As extreme as it was depressing to be a SoFi investor, we're quickly getting into the opposite environment. So fun things and crazy things can happen. It's fun, good times.
Q4 EPS estimates here? Or you want to wait?
I haven't even looked.
All right. We'll do that another show. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But
bye.
Did you just kick them out?